All right, welcome back to our Road to Retirement podcast. I'm Tony Marlett Jr., Brookside Tax and Financial Group. With me, I should say with us as always, Tony Shore over at Gradient. Good morning, Tony.
Well, good morning, Tony. Two Tonys today.
I
You,
know
you,
we have no Chris. I'm kind of taking over for Chris today, so you guys are stuck listening to me and my nasally Midwestern accent more than you normally do.
well, yeah, and that's fine. Chris, I don't know. I'm trying to debate. Are we going to miss him or are we going to make improvements to the show today?
Well, we'll have to see. Maybe we can let our listeners decide,
Yeah.
and then maybe we just kick Chris off the show permanently and just tell him he's no longer wanted.
no, we love Chris,
Yeah,
and
he
he
is.
kind of
He really is. He's a wealth of information, as you know.
Yeah, he is. He is. He's been doing this a long time. So, well, there's a lot for us to talk about, though. We have no shortage of things to talk about, obviously, with everything that's going on out there. I mean, again, and we've talked about it a little over the last few weeks, but we got to talk about where we're at. I mean, economically and with finances, because we've got rising interest rates, and the Fed has now finally admitted they made a mistake with the interest rates, maybe acted too slow. And so the Fed raised the interest rates. We've got rising inflation.
Yep.
Obviously, inflation is high, prices are high. We've got market volatility like crazy this year. I think the markets are still down overall this year for
Oh
2020,
yeah,
so or
for sure.
2022. So, with all this happening and plus still supply chain issues, Tony,
Absolutely.
a lot of people are worried. And then I see the talking heads talking about, um, interest rates and inverted yield curves. So, what's your take on all this?
I mean, it's a lot. It's a lot to unpack. And a lot of this, when I started learning about the business and how the economics of everything works, it does a lot of it anyway, kind of tie together. The
Mm,
big thing that and a lot of people are really kind of surprised at and kind of creating this nowhere to go or where should I go type mentality
yeah,
is the fact that, you mentioned stocks are down year to date. It's not even close. They're way into negative territory. We
right.
actually just crossed into negative territory year over year. So not only year to date, but also if we go back to this time in 2021, the last 365 days were negative too, but bonds are getting hammered worse than stocks. And
Yeah,
that's kind of what's causing investors anyway, portfolio management to, need to take a little bit of a different turn here.
sure. Sure. So for our listeners out there, Tony, we can tackle one or all of these issues, but especially those who don't have a plan or those who just have all their money that they're saving for retirement is in the stock market through 401ks or IRAs. If they're near retirement or in retirement, this has to be concerning for them, right?
Well, yeah, absolutely. I use the example of a house with many clients. So obviously, in the real estate market is crazy now too. But if you live in a house, you're a younger family, or even if you're a younger individual, you're planning on staying in that house for the long term. You're not going to sell your house if the housing market's going up or down. Not just based on that, anyway.
Right.
Same thing if you're a little bit more into your retirement and maybe you've downsized, maybe you're an empty nester. You're not just going to sell your house and move into a different one. The same thing because market conditions aren't right. So your house, in most cases, fits you, fits your family. Really, your investments should be treated the same way. If you're in the beginning stages of your working career, all this volatility should be great. I
Yeah.
remember my first 401k when I started. My first 401, I believe, was back, believe it or not, at the end of 2007, when
Wow.
really all the whole market started crashing from the housing
It's
crisis.
true. Yeah.
And I mean, it was great. It was literally like going to the store and shopping off the clearance rack. So
Yeah.
that said, to your point, if you're maybe in the later stages, it is maybe time for a little bit more active planning, and you may have some benefits within your 401k where you can use some different investments. If not, in most cases, you're able to move money out of there, obviously without taxes or penalties, and go into something a little different. Necessity has bred creativity in some cases. So,
Sure.
there are other options out there.
Right, and that's something that you and Chris and you guys do over there at Brookside for your clients is you don't have all their money just in the stock market. There are other avenues. You make sure that they have liquid funds and emergency funds, and there are other vehicles that people can use to still try to have some growth, but yet at least protect principal or protect from the downside, right?
Yeah, absolutely. And you're able to participate in the upside too, which is not something you're getting right now in bonds or cash. So, Gradient is big into alternatives, and I read something from them a couple weeks ago. They wouldn't be surprised in maybe within the next decade if some people have up to 50% of their portfolio in alternatives. And of course, when we're talking about alternatives, we're talking about things like non-traditional investments, not your typical stocks or bonds, but um, gold, silver, put options, call options that are being managed, real estate investment trusts for, dividends income. And it doesn't matter. You don't have to go out and pick these necessarily. They're going to be professionally managed for you. But
Sure,
again, it's just a switch
sure.
from your typical
Right.
stock or bond.
Yeah, and we've already seen that, right, Tony? I mean, you see people going to precious metals, buffered index portfolios. That's one of these vehicles, right?
Absolutely. You took. I was trying to think of the word gold. I said gold and silver, and precious metals was at the top tip of my tongue,
Yes.
and I couldn't get it out. So thank you.
Yep.
Yes,
Yeah, so
precious
precious
metals. Yep.
metals and buffered index portfolios, and these are still investments, and some are tied to the markets, but they're alternatives to the typical S&P 500, so to speak, or the typical money
Yeah.
market accounts, right?
Yeah. Absolutely. And they're again, you have to get creative in times like this. So these are great solutions that our clients don't have to worry about managing them. All this jargon, it kind of sounds like, wow, this is all making things really a lot more complicated. No, that's what we help you out with. That's what your financial professional is here to help you out with. So there's a lot going
Right.
on right now. Obviously, we've talked about inflation. That's probably the number one thing we talk about.
Sure.
Um, if inflation does start to level off or even to drop, you could have people going back out consume. That would benefit consumers, obviously, which is only going to benefit growth on some of these stocks in the market. And these companies are already they're still in really good shape. It's not like
Oh, sure.
companies are not earning anything. I mean, almost all the companies have reported in for the first quarter for the S&P, and 77% of those have beaten expectations. So, I mean, we're still, valuations are still strong. Companies' earnings are still uh, very good. And these solutions we talk about are designed to diversify and kind of take advantage of all these different things that are going on.
Sure. Well, you have to, and that's the beauty of working with an independent financial services professional versus a big box company or just going to a broker, because you guys look at the big picture, you look at all the options and figure out which ones are best meet your client's needs, what's going to be in their best interest of every option available out there. And you have access to that. So that's really, really important. I think we need to drive that point home, Tony. In fact, speaking of that, let's take a minute here to let our listeners know how they can get a hold of you, because I know you and Chris are offering complimentary, no charge consultations.
Mhm.
How can they get a hold of you?
So your favorite graphic just came up on our screen, or Chris's favorite graphic. But for those of you who are not watching or listening, our phone number is 440-886-3550. You can visit us online, of course, brooksidetax.com. We're starting to see a lot more online traffic, obviously, and then visit us on Facebook at Brookside Tax and Financial as well.
That's awesome. Well, and you know what? talking about this, talking about all these alternatives, I mean, we hear about vehicles that have been so improved over the last number of years, like buffered index portfolios and even fixed index annuities. They're making those more and more attractive for people to use to plan for retirement or their investments. And I really think it's important to look at all the options and alternatives out there. And not every option is going to be right for every person. Like you said, you were great because you can buy in people who are younger. This is no big deal. Even a recession like we had in 2008, hey, if you're buying into your 401k and putting money in at that time, that's only going to benefit you because you're going to catch the upside. However, it depends on your time horizon. If you're 60 and you want to retire at 62 and you see these things happening, and you start to get a little concerned, or you're 65 and you've just retired, or whatever age it may be, then it's a concern. But no matter which end of that spectrum you're on, your time horizon, you've got to have a plan in place, right? And that's the key.
Absolutely. Your portfolio construction and the way that it's modeled should really mirror your goals, your strategy, and your time frame. So a lot of times people are surprised, when they come in for a meeting and, we do our introductory fact finding, our discovery meeting. Usually meeting number one is just that. Our second meeting would be to go over any plans. We have statements to go over that you bring in on the first meeting. And then we're able to do a preliminary blueprint of what your overall portfolio would look like. And it's not just your retirement account or your 401, it's everything else in your life financially too. Usually the third meeting is when we fine tune everything and then move forward from there. So people are often surprised when we're going through our allocation roadmap, our asset map, the blueprint. They're usually surprised to see how creative we can get. I think some people think like, why should I work with you? I have a target date fund in my 401k that's going to automatically adjust. And
Sure.
those are fine funds for what you're looking at. But when you work with a financial professional and a professional asset management firm or a fiduciary like us, who it's our job to work in your best interest, we do things a little differently.
Sure. Well, and that's the important distinction right there. I love that, Tony. Now, you mentioned inflation, and if it does level, you said, hey, if it levels off or goes down, again, that's just going to strengthen companies, and that'll cause the stock market to go up again, and we'll see some good gains. However, if inflation continues or increases, then I think I see people, at least right now, spending less and less, and that's what's led to this market volatility and this downturn in the market. Because I know for myself, a lot fewer people. I mean, airline tickets, rental cars,
Oh yeah.
obviously gas. We talk about that all the time. That's the obvious one. But I mean, everything right now is just getting crazy, and I see people, at least middle class, upper middle class, saying, let's put on the brakes as far as our spending. And I know my wife and I have. I mean, we're not spending nearly as much as we had planned to. I know a lot of people aren't traveling this summer like they normally would.
It's interesting you bring that up. My wife and I were looking at doing the same thing with airline tickets. And I mean, gas is kind of the great equalizer too. So it's like if airline tickets were fairly priced or normally priced anyway, and gas was still high, you'd have people flying places because it might cost you the same for a plane ticket as it
Right.
is to fill your car up with gas. So this kind of, I think, is like a microcosm of the perfect storm of everything that we're seeing. You might say, well, forget the plane ticket, I'll just drive. Well, then you're spending, depending on where you're going, $200-300 in gas if you're going across the country or even halfway across the country or even staying regionally.
Sure.
Which might almost be the cost of a plane ticket. So it is kind of the great equalizer. And you mentioned inflation. If we haven't seen the worst of it yet, that's going to be really bad, because then what we have happen is the Fed get more involved, continue to raise rates, which is going to leave people spending less. It's going to leave businesses with spending less as well. And we've already seen job openings come down as a result of some of this too. So the most recent JOLTS report, I forget what it stands for, job opening, labor,
Yep.
turnover, something. I think the S is for something. And we've seen,
I think you're right on that.
yeah,
I've heard it both ways. Yeah.
all right. We've seen, we had job openings, say, whatever, 12, 13 million for 7, 8 million unemployed people. That number's come down to about 11. So again, a lot of this, we talked about the domino effect earlier. A lot of this is that domino effect. I think if inflation does start to cool, we talked about that too, where could see people continue to go out, and that would be a real kicker for the market and for people's portfolios, because you already have strong earnings and you'd have, consumers going out spending more on things like you said, airline tickets and, maybe on gas, driving and things like that to prop up those companies and drive up the markets.
Yeah. Yeah. And I mean, I'm just talking about no one has a crystal ball. You don't, I don't. And I'm just talking about my bubble that I live in. But the people my friends, my neighbors, a lot of the people I work with are spending less, and they're talking about it vocally. Like, I mean, you've reached a point when you're like, yeah, we're not going on vacation. We don't want to spend the money. Or, yeah, we stopped going out to eat because it's just gotten too expensive. And I mean, stuff like that you hear, and this is, if you're hearing it from upper middle class, then you're like, okay, so people are just really cutting spending right now, the people I know. And so that concerns me for our economy, because obviously, for better or worse, the American economy is driven by consumer spending, right? I mean,
Without a doubt. Yeah.
yeah.
And I mean, who knows at the end of this, say if we, we will make it out of the woods. Nobody's saying that we never will. It's just
Oh,
a
yeah.
matter
I mean,
of
this
how long.
happens, and it's happened
Correct.
before. Yeah.
Yep. We don't know, honestly, if there's not going to be a whole new set of issues that come after that. So, and we
Sure.
don't know what that would be. So, we look at it, like you said, we look at what's going on right now and how it affects us. If we do start seeing some of the light at the end of the tunnel on some of this, there is very a good chance that we could still see something that we don't even know about right now. I
Yeah.
don't think too many people saw geopolitical concerns at the beginning of this year.
Nobody saw COVID coming. That's for sure.
Absolutely.
Nobody saw
Absolutely.
the Ukraine coming. That's
Absolutely.
for sure. And there are things that maybe they could have done sooner, like the Fed. But here's the bottom line: eventually, there's going to be another huge upswing, like after 2008, 2009, right? I mean, we had a recession. They call it the Great Recession that we had, and everything tanked. The housing market tanked. Everything tanked in 2008, 2009. But the upswing was huge. And so people that panicked and got out missed all that upside. And then markets went on to have over a 10-year bull run with record highs. And a lot of people who stayed the course made a lot of money during that time, and who had financial plans in place and worked with financial services professionals. They're the ones that reaped the most benefit from that upside. And that's where we're eventually headed. I mean, whether we go down further and do go into a recession, or whether it levels out, like you say, and that's what we hope it does. But either way, eventually there's going to be an upside. Even if 2022 overall is a down year, we're going to have an up year. I mean, even bear markets only last for, a year and a half max. So, and we're not in bear market territory yet. So, I mean, we've dipped there, but we're not in a bear market officially. So, right?
You're correct. Yes. Yeah, we're kind of on the edge, but yeah, you're right. We're not there.
Yeah. Yeah. So, I mean, my point is stay the course, but have a plan. I mean, work with a financial services professional. Wouldn't you say that's the main first step, and that's how people can weather the storm?
Yeah, I think so. If nothing else, I've always told people a good advisor can help save you from yourself. We act as counselors sometimes,
Yeah.
where I'll be honest, asset allocation has become, just as asset allocation by itself has become a little commoditized. So it's up to us to add value in different ways, and that's really one of the ways that that we can do it.
Sure. Sure. And that makes sense. Well, this has been a great discussion. Let's wrap it up by letting our listeners know how they can get a hold of you. And Tony, I know you love hearing from our listeners as well. Let them know how they can get a hold of you.
Yeah. Phone number 440-886-3550. BrooksideTax.com is our website, and Brookside Financial on our Facebook page. I always heard that people remember numbers as an adult. Instead of us saying 440-886-3550, say those last four as 3550. So hopefully that's a little a tool that works.
It does help me.
3550.
Yeah, that helps me. That's a good point. And I have heard that too, and I think I remember it better. But yeah, and a lot of people are driving. So the website, once again?
Yep, it's BrooksideTax.com, and
That's
Facebook
easy.
at Brookside Financial.
All right. Well, thank you so much, Tony. And hey, we made it through a show without Chris.
Hey, thank you. Yeah, we did. I don't know how he'll feel about that. He'll either maybe he'll like it, maybe he won't. Who knows?
Yeah, we'll see. I think we did okay, but boy, Chris's insight is always valuable. He always has a lot to say. So,
He really does.
but you do as well. And it's great talking to you. Good to hear about what's going on with the markets, that there are options out there. But that does it for today's episode of The Road to Retirement with our host today, Tony Marlette Jr.
Thank you. Thanks, everyone. Thank you, Tony. Talk to everyone soon.